I've heard so many wonderful things about the She Means Business group, from my colleagues who have joined other sessions. And so it's such a pleasure to be able to meet with all of you in person and just hear more about your businesses. I think, I'm delighted to be able to spend a little bit of time with all of you this evening. And today's session is really kind of starting to look at your financial management for your business. And particularly, we're going to talk a little bit about understanding, well, I have somebody in the waiting room, understanding the accounting tools that you can utilize. It'll give you some insights and visibility into how your business handles money coming in and out of your business. This is a really critical component for any business owner. As you start to kind of understand your financials, it becomes a really important aspect of your business to understand how to read a balance sheet and a P&L statement, how to understand how cash flows in and out of your business. And so our goal today is just to give you a high-level overview of what are some of those accounting tools that you can leverage to better understand, how profitable your business is. And I'm just admitting more and more people into the session. So
I can go ahead and do that, Maria. Don't worry.
Oh, okay. I didn't know if you were seeing it as well. So, all right. Good thing you are too. So what I will tell you is that the more savvy you become with understanding these tools, and the better your conversations are going to be with people around you who support you, like your accountant. You just get more savvy with it. And so our goal this evening is to get you comfortable with how to utilize some of these tools and how to read them. What are they telling you about your business? And so you may have, I believe last week, my colleague Jason talked you through basically this juice shop that we have, this scenario of a juice shop. And so we're going to be working with that today to kind of settle in on one example and essentially work through looking at the financials for the juice shop. And so there's an Excel spreadsheet that I'll be taking us through to kind of fill in and get an idea of the revenue that the business is kind of generating. And so we'll go through that activity as a group, but I encourage you as we go through this, if you have questions, comments, you can pop them in the chat. You can ask them on the open line. Happy to accommodate any questions you may have. So let's take a look at the agenda for the session here. We're going to talk a bit about, and I know you all got access to this wonderful platform, the Know Your Business platform. If you haven't had an opportunity to complete this e-learning, know that you have been added and that you should have received a logon, credentials to get into the system. But essentially, there's self-paced learning that you can complete that'll walk you through some of the concepts that we're going to talk about. So if you didn't get a chance to do it beforehand, we're going to do a brief review of some of these concepts here now. And it is a really good idea to go back and complete that as part of your post-session work, just to understand some of the, features of what you're looking at when you're reading these financial statements. So we're going to talk a bit more about the 3 financial statements that really help to determine the health of your business and give you an idea of how profitable you are, where's your money going, what are some of the expenses you're kind of dealing with, and then, what's your net revenue kind of look like. And then we have this really interactive activity where we utilize the Excel spreadsheet, and we go through this exercise of actually inputting the numbers so that you get into this habit of doing this practice. And we encourage business owners to frequently look at these tools and to frequently, do this sorts of activities for their own businesses. And we can provide you with the Excel spreadsheet that we're working with here, because it has all the formulas kind of figured out for you, but you can easily transfer what we're showing you here for your own business and utilize the tools to help you just gain some insight into, how profitable your business is right now. Where's your revenue kind of coming from? Where are your main expenses going? And that sort of thing. And so again, if you have questions throughout the session, please don't hesitate to ask. So I think we're all pretty good on the technology, and Yahira just went through a few of these things, but if you're able to join us via video, it's always helpful to see faces when you're delivering this sort of workshop. And then, I know you can all utilize the chat because I see that going. But let's talk a little bit about the ground rules for our session. I always find it very helpful to talk about these things in a virtual classroom. So, we're going to respect all contributions and ideas. There's a lot of math coming your way this evening. And so I just want to level set with you. You may want to have a calculator handy, but we're going to, respect all contributions. If you're not speaking, we just ask that you please remain on mute and keep your video on. And we're together for 90 minutes. So I know the session is scheduled till 7:30. This particular session takes about 90 minutes, but it's great to have a little bit of leeway and time in case we go over. So just encourage you to make the most of this session. And we do have a major disclaimer. There is a lot that we're going to be covering. When you start talking about numbers and Excel spreadsheets, it gets intense, right? So if you can, as much as possible, just minimize your distractions. It's very helpful as we go through these exercises. And so that's like my pay attention slide kind of thing. But let's talk a little bit about the 3 financial statements that we're going to be reviewing during the session. And before we dive into actually entering and inputting things, I would love to just kind of hear from you in terms of, the experience you have with these. What does it tell you? What is it doing? Hopefully I'm not blocking anything on your screen here. Okay, good. So when it comes to the balance sheet, using the chat, can you pop in there or maybe even come off mute and maybe share with me, what is a balance sheet? How do we utilize it? Why is it important? Any ideas on that? I'm gonna give you a second to put in the chat.
Hi, my name is Victoria. I am the founder and creator of the Pink Tub. We're opulent, organic, handmade body and bath brand. A balance sheet to me is your expenses, your outgoing and incoming accounts receivables and payables, and also your products. I believe also with payroll. So all of that is included in your balance sheet.
Yeah, very good. Thank you. And I love you. I love the concept of your business. Very excited. Hopefully you put your website on here because I always like to find new products.
Oh, my e-commerce is amazing. It's
all right. Well, cool. I'm gonna look you up. So you're very right. So the balance sheet basically shows you money coming in, money going out, but essentially it measures the assets that your business has over a period of time. And so the way that it does that is it shows you the mix of equity that you have in your business, what you own in it, as well as the debt that you may have to, if you took out a loan to start up your business or you got, money from your own accounts, it will kind of measure that mix of debt and equity that you've utilized to fund the assets or the product rather in your business. So the assets comes down to your liabilities, the debt that you have, plus the equity that you have in the business, and that's the balance sheet. And so this is a really important tool because essentially it gives you an idea of the equity and the assets that you own in your business. And so we're going to look at examples of this later on, and we're going to talk a lot more in depth about this tool, but at a high level, that's how you want to think of your balance sheet. Looking at your liabilities and the equity that you have and making sure that you're, in the positive, because that means your business is, in the green. What about the income statement, or you may have heard of this, referred to as the P&L statement? If you've done your taxes, this is your P&L. And I see some responses coming in. Keeps track of your numbers going in and out. Let's see, I'll give you a minute to type in the chat here. The profits and losses, yeah. And it's pretty self-explanatory, but you'll see here, if we look at, it shows you if you made money or not, right? Which as a business owner, that's probably one of the most important documents. If you've done your taxes before, you know that your accountant may produce a P&L statement for you with your tax returns, which basically shows is your business generating revenue. It looks at how much profit are you generating and how much does it take in losses or expenses to run your business. So in a nutshell, this tool provides you a record of business operations during a period of time, and it lists all the revenue that you've generated minus all of your expenses, because that will show you your net income for the business, how much money you're generating after you settle out all of the expenses that you made, that you put in to get that revenue. That'll really give you an idea. So we like to, in the financial services industry, we like to think of the P&L, the income statement, is essentially a scorecard for the health of your business. So we utilize this tool very frequently to help us identify, is this a business that's consistently generating profit? And usually with most income statements, it's a really good tool to kind of see how you're trending. So it's always good to look at more than just a 1-year snapshot. We like to look at a few years just to see, are you having significant growth? Is your business, generating revenue? And is that revenue kind of growing over from year to year? And so we always just think about the P&L as a scorecard, right? You can really assess the health of your business. Are you making money or not? And then the cash flow statement, let me give you a chance to kind of put in what you know about this one. Cash flow is something that you hear about quite frequently. So what do we know about the cash flow statement? It's money at your disposal. Available cash on hand, the money movement. Yeah, that's a really good way to think about cash flow. It basically looks at how money moves throughout your business, right? So there's a few components to the cash flow statement. So it'll show you your earnings, how your business, what the operating, how it's operating and earns money. It also shows you where you're spending your money. So what are the things that your business is spending money on? So think labor costs, think, if you're in a retail space, rent costs, think inventory, where are you spending money? And then it also looks at financing activities. So what money are you using to fund your business? Is it coming from a loan? Is it coming from a grant? Is it coming from your savings account? So it basically takes a look, this particular statement will look at how money moves throughout your business. So if you borrow money, you buy inventory, you use it to create product, you generate revenue, it kind of just shows that whole picture of money moving throughout your in and out of your business. So it is a really good indicator for you of where your money is going. And if you need to, this is a really good tool to help you assess, do you have the right amount of financing? Do you have the right amount of funds for operating activities? Where are you spending your money? And so it gives you that snapshot that you may need to really determine performance. And this is the bottom line, is the income from the income statement will flow into the cash from the operating activities that you generate. So just how does money move throughout your business? So let's dive a little bit deeper in each of these categories before we actually go into our exercise. So as we mentioned, the balance sheet measures the assets that you own as a business over a period of time, and it'll show the mix of debt versus equity that you have. So, and we have here a little bit of an example for you that we can share with you how this may work, right? Or what we're looking at. So assume that you have, let's say we have a business, so just a generic business that we are a part of. And we have $100 that we start off with in cash, just to keep the math super simple. And we buy $400 in raw material to make our product. It cost us $500 to produce the finished goods. So all in all, in terms of my assets, I have the cash, I have the raw materials, and the finished product that I'm selling. That all totals up to $1,000. And then on the other side of that balance sheet, you have your equity and your liabilities. So here you'll see I have a bank loan that I could have taken out to produce and buy inventory or the raw materials. And then I also have maybe $500 of my own money that I've used to source and fund my business. And that is a total of $1,000. So the key here with the balance sheet is these should be equal, right? So that means that, you know, that's our source of financing for the business, the liabilities and the equity is matching the assets that I have with the product that I am producing. And so what you should see is, and initially it should balance, but if the business does well, then you should be seeing the equity side as you sell goods and you create a profit, you should be seeing that increase, right? And so that means that you're able to generate profit and revenue, and you're in a very good position. Your business is doing well. You're actually generating, you know, funds. So it does kind of give us that snapshot in terms of the balance sheet. Now, when it comes to the P&L statement, as we mentioned, this is again a scorecard that gives us some insight into the revenues. It tells you how do you manage costs to generate revenue, and so provides you with a record of you know, business operations during a period of time. It's usually done on a quarterly or annual basis. And what it essentially looks at is your revenue minus the expenses that you're making to create that profit or provide that service. And so again, as I mentioned earlier, it's a really good tool to utilize and to see, you know, if year over year, this is a tool that you can kind of utilize to determine, are you consistently growing revenue? Are your expenses getting higher? And if you think about, like, in the last 2 years plus years with COVID, a lot of our expenses are increasing, right? So if you have this really strong line of sight into your P&L and you get really good at working these numbers, you probably have started to feel that in your business and seeing, you know, costs are going up. Do your prices need to go up to kind of match and maintain you where you need to be? So this is a tool that can kind of help you quickly assess that, because you're seeing in real time, what does it cost to provide the services that your business provides? And are you generating enough revenue to cover those costs? And so that's why having this tool is super important, because it gives you line of sight into that. And many business owners in the last couple of years have had to make adjustments based on the cost of everything is going up. And so maybe you're seeing a price adjustment to kind of keep up with some of those increased costs. Hopefully that makes sense. But here is an example again for you in terms of the P&L and income statement. So let's say we have our sample business here and we generate $1,000 worth of revenue. So this is what we sold, and the easiest way to kind of calculate revenue is price times volume. So, you know, what's the price and how many did you sell? And then we look at the cost of goods sold. So how much did it cost to produce that item or service? And we kind of subtract that. So we know that if we have a revenue of $1,000, but it costs us $500 to create our product, our overall gross profit is $500. And then from this 500, then we also need to start to think about, are there administrative costs in our business? So do we have things like our internet, or, you know, are we paying for different things like that we absolutely need to keep our business running. So if you figure like $100 for administrative costs, then you have any cost that's basically associated with running the business. Then you'll see that it provides you then with the figure of the earnings before we deduct interest, tax, and any depreciation on our product. Depreciation is a concept that we're going to talk about later on. But for example, if you have, let's say you have a flower delivery service, you're a florist, and you need a van to deliver your product. Depreciation is a good way to help spread out the cost of buying that van over a period of time. So rather than having a huge hit to your P&L, we can actually spread that cost over a period of time based on the asset that we're looking at and how long it will be useful for. So if you have, you always have to factor depreciation if you have different equipment that you utilize for your business. And so that also needs to come and be deducted from your revenue. And then you have, the earnings before you deduct interest and tax expenses. So interest payments are what we consider if you have a bank loan where you're paying interest on any of the money that you borrow. And then you have your pre-tax income. And then if you pay taxes, which we all do, then you see your net revenue are the net profits that were achieved by the business. So the moral of the story when it comes to the income statement is it's not enough to just look at how much money is coming in. You have to also start looking at the little details of how much money are you putting into making that $1,000. And then you'll get a true picture of how much money your business is kind of generating. Hopefully I'm letting people in, Yahira, so hopefully I'm doing it right.
Yeah, no, you don't even have to worry about that. I don't think you see me. I'm letting them in as well. So
Okay.
yeah, I got it.
Just want to make sure I'm not ignoring anybody as they're trying to.
No, you're good.
Okay, cool. All right. So again, a lot of these concepts are going to make a lot more sense once we get into the Excel spreadsheet and we start working through some of those examples. But let's talk a little bit more about depreciation, because this is an interesting concept that we kind of were hinting at in the previous slide. So if you have a business cost like machinery or equipment that you need for your business, depreciation on an income statement allows you to spread the cost of that equipment over a period of time. So a lot of business owners like this because, for example, if I buy that van for the florist, it's a couple, it's like $20,000, $30,000, depending on the van that I get. And instead of counting it immediately on my P&L, I can kind of spread that cost out over a period of time. And it just doesn't look like it's such a big hit. And so, this is an important thing because I'm buying the asset today, but I'm going to plan to utilize that asset over a period of time for my business. So that's why I can kind of spread out the cost. So it is really interesting, to do it this way because it's not like a huge hit on your P&L. You can kind of spread that cost out. So let's talk a little bit about how this works. So again, to account for this fixed asset cost and spread it over a period of time, accountants will use the concept of depreciation. And so it'll allow you to spread the cost over a period of time. And then the formula for this to calculate depreciation per year is we look at the cost of the asset and we divide that by the useful life of the asset. So for example, with my van example, I would maybe say it's like $25,000 of the cost of the van, but I can say that it's going to be good for 60 months or 5 years. And so then it allows me to kind of figure out what would be the depreciation figure that I would put into my P&L. Now I saw there was a hand up, so I want to kind of pause.
I was gonna say, so Kiara, looks like you had your hand up. Did you have a question?
Yeah, I was gonna say, how do you calculate depreciation? But you already answered it, so I'm good. Thank you.
Mhm.
Perfect, thank you.
Yeah, so this is a helpful one to know how you do that, because this is the when this is like straight line depreciation. This is the formula that your accountant will utilize to kind of determine that. So you'll notice in your P&L statement, you do have a field for depreciation, and that's the number that you're going to want to put in here. You know, what you figure out from this formula, the cost of the asset divided by the useful life of the asset. So, you know, generally, how long does a van last you for? And so you kind of come up with that figure. So the reason why this is kind of important too, and the accountants will utilize this, is because there's a tax deduction, and I'm not a tax expert, so let me just say that right off the bat. But you can talk to your accountant about this, but there is a depreciation tax shield. So any expense that you have for your business, you can deduct, or you can deduct it from your taxes, right? So it's considered something you can write off. So those expenses and money that's going into your business to buy equipment and such can be subject to this depreciation tax shield, so that you actually get a tax benefit, because it's money that you're kind of investing and reinvesting into your business. And those expenses can be tax deductible. And so that is something that if you have equipment, or something that you need, that you're purchasing to run your business, you are going to want to ask your accountant about the depreciation tax shield, because some of what you are, the upfront cost can be tax deductible. And so that'll really help kind of unlock some savings for you from a tax perspective, which is super helpful, right? We all want to have that tax shield, as many deductions as possible when you're a business owner. So I highly recommend looking into that. All right. And last but not least, we'll talk about the cash flow statement. So we talked about in the beginning of the session, this basically shows you how money moves throughout your business. And so it provides, shows you what's coming in, what's going out, just that flow of expenses. So there are three main components to a cash flow statement. The first is the operating figure. So just what does it take to operate your business? What are some of the expenses associated with that? The other category is the investments that are, you're making in your business. And then the other area is the financing. So how are you getting money to, fund your business? And so this is a really good way to kind of map and understand how money flows throughout your business. So one of the things, if we look at these specific areas, so the three components that we're kind of evaluating, when it comes to operating activities, this measures the cash that your business is bringing in on a regular, through your regular business activities. So what's the net income that you have? It also looks at, the inventory that you may purchase for your business. So anything related to operations goes into this category. The investing activity, if you buy, anything, equipment and that sort of thing, you're making an investment in your business, and it is cash going out, but again, you're figuring that depreciation into it. And these are like the long-term fixed assets that are part of your business. They're figured here. And then last but not least is your financing activity. So where does the cash that you have to start up your business, where is that coming from? Is it from investors? Is it from a bank? Is it from cash that you are, bringing in and putting into the business? So essentially that kind of it covers that key area. But there's 3 components to a cash flow statement: the operating activities, investing activities, and financing activities. And we're going to have an opportunity to work with these numbers so you can see exactly how they pan out. So you'll see we have this question here. So if you are in the first year of business, in your first year of business, we're going to think about, for the 3 sections, operating, investing, and financing, is that a source of funds for your business, or is that a use of funds? And so we'll kind of go through this. So for operating activities, in your first year of business, do you think that this would be a source of funds or a use of funds? And you can pop it in the chat. I see use and 1 source. So this is a little bit tricky. It's a bit of a trick question, and I apologize for that. But for when it comes to operating activities in your first year of business, it actually can be both, right? So it can both be a use of funds, because you may need to, utilize that money to buy additional inventory, put it back into your business, but it can also be a source of funds because you have revenue coming in, right? With regard to investing activities, is that a use of funds or a source of funds? Let me bring up the chat here. I see use. Okay. And it never fails. People always think I try to trick them on the second one, but I'm not trying to trick you. So this one, when it comes to investing activities, this is a use of funds. So remember, when you're investing your money back into the business. And so you're looking at those activities like purchasing equipment, purchasing inventory. It's a use of funds for your business. And last but not least, you have financing activities. And is that a source of funds or a use of funds? See a lot of source, and it is, right? Because when you're the money that you're taking out of your savings, or the money that you're borrowing from the bank, or you're taking from investors into your business, that is absolutely a source of funds coming into your business. And so very nice job on that. Okay.
Hey, Maria, sorry to pause for a second. I just want to see if everyone kind of understood the difference between what source of funds are and use of funds. If you just put it in the chat, if you understood, or if you just need just a little bit of a further explanation, feel free to put it in the chat. Or Maria, if you could just go ahead and, just in case anybody that is shy and doesn't want to put it in there.
Sure. No, let me go back. So, and this is all gonna, part of the Excel spreadsheet, we kind of come back to this, right? So we will revisit this, but operating activities, if you remember, are the revenues that your business is generating, as well as the operating activities and the money that you're spending to make your product, for example. So that's why it's both, right? So money's coming in from your sales, money might be going out from what you may need to spend to actually develop your product. So that's why it's kind of a mixed bag for operating activities, because it's inclusive of what revenues you have, as well as what it's costing you to produce. Investing activities are the money that you're kind of putting back into your business. So you think about this as when you purchase inventory, when you purchase equipment for your business, like that van we were talking about earlier, that's kind of money being used, it's going out. And then the financing activities are money coming from your savings or investors or a bank loan. And so that is a source of funds for your business. It's money coming into the business because it's, you're raising money and funding your business. So hopefully that.
Yes.
Verified. Okay.
Thank you.
Sure. No, it is an interesting concept, but remember with the cash flow statement, what this tool tracks, and the reason that you're looking at these three components is because we're really trying to understand, is money coming in? Is it a source of funds? Is that my using funds? Because you're really trying to figure out is how does money move within your business? You know, because then you're able to see, you know, gosh, maybe I need more financing activities. I don't have enough money to invest and buy the equipment that I need. Or if I actually had XYZ equipment, I could make more product. And so that's why this tool is so critically important, because it's going to give you that insight into your business of, you know, how is money moving throughout my business, and how could it be different if I made some adjustments? If I made these investments, would it help boost my revenue? If I raise more money from investors, what else can I do to really help with the operating activities? Okay, so so hopefully you're familiar from last week's session and Jason taking you through our juice shop that we have. So we're in a trendy neighborhood, but assume that we're going to revisit this scenario and example and go back to working with this juice shop. And so we plan to open another store for the example that we're looking at. And the financials that we're going to be considering now are based on the second store for the juice shop. So we're going to look at, you know, what is the cash flow statement, P&L, and balance sheet kind of look like for my juice shop. So you'll need two things as we go through this exercise. Hopefully we're able to get a copy of the participant guide for the session. And it's always handy to have a calculator. My Excel spreadsheet will walk us through, it has like all the formulas in it, but if you're doing this solo, you know, you'll need a calculator for this to input. Okay, so in the participant guide, you'll see this activity begins on page 2. You can follow on the guide, or you can have it as a resource for after. The Excel spreadsheet is pretty straightforward as we work through it. So we'll kind of be completing it together. All right, before I share this, let me switch a little bit and find my spreadsheet. And just let me know when you can see this one. Can you see it? The Excel spreadsheet? Yes, okay, good. All right. So this is the tool that I'm more than happy to send to you after this session, because we put this together for this exercise. But what we have found is with many business owners that we take through this, they're like, can we get a copy of this? And so we can send it to you because we have the formulas kind of built into it. And it's a step-by-step process of exactly what you're going to need to complete this in its entirety. So we're going to be working with the juice shop scenario that we have, and we're going to complete the income statement, balance sheet, and the statement of the cash flow statement. Okay. And there are 7 steps we're going to go through to get this information. So let's fill in some of this information now, and we're going to start with the balance sheet. So the first area that we're going to look at is completing the balance sheet. So assuming that we have this juice shop, we're opening up a second location, we are going to probably need to raise some funds to be able to afford opening this new store. And so here's where some of that money is coming from to fund this second store location. So I'm going to contribute $3,000 from my personal savings account. I'm going to borrow $2,000 from a friend as an IOU. And I'm going to secure a $10,000 loan from a community lender to get this second store up and running. So you'll see here, we're going to first start by completing the liabilities and equity side of the balance sheet. So if we go back to this main screen, we're looking at this area here that we're completing. Okay. So let's plug in some numbers here. So I'm borrowing $2,000 from my friend. And I just have to enable editing. I took out a $10,000 loan to fund this next location, and I'm putting in $3,000. So I have the total debt and equity in the business so far is going to be $15,000. That's the money that I have to get me started with this shop. Now, the next thing we want to do, and you can pop this in the chat. We want to figure out, is this classified as debt or is it classified as equity? So debt, obviously money that you borrow, equities, money that you kind of put into the business, but you kind of own it. So that's the easiest way to kind of think about it. So the IOU from a friend, would you think that that is considered debt or equity? I see many of you are saying debt, and you're correct, because that is money that I have to pay back. It's an IOU. What about the loan from the community organization? Is that considered debt or equity? It is a loan, right? So this is considered debt as well. And then what about the $3,000 from my savings? What would you say, debt or equity? Yeah, this is definitely considered equity. It's money that I'm putting into the business. Still my $3,000 at the end of the day. I don't have to pay it back to anybody but myself. Hopefully I pay myself back if the business generates revenue, right? But in essence, that is the funding source for the business that I'm going to utilize to plug in the numbers on my balance sheet. So I can see if I go back here to the balance sheet right now, after plugging those numbers in, the $2,000 from my friend, the $10,000 loan from the bank or the community organization rather, and my $3,000 contribution, I have total liabilities, debt and equity is $15,000. But the interesting thing, now you'll see this is also reflected on the cash field, okay? Because technically it's money it's assets that I have to begin now to open my store and do some business here. So hopefully that makes sense. And you notice here, the key with a balance sheet is it should balance, and right now it does, right? So let's go to step 2, and we're going to fill in the asset side of the balance sheet. And so here's something for you to consider. So after we successfully raised $12,000 and we contribute $3,000 of our own money, it's now time to purchase the assets. What am I going to need to get my business up and running? So the assets that you purchase are going to show up as respective line items here, and the cash left over is going to show up in the cash line side of the balance sheet. So let's take a look. What are we doing? What do we need to do to get this new store up and running? So I'm going to purchase a juicing machine. Remember, I have a juice shop. I'm going to purchase a juicing machine for $1,200. I'm going to purchase 2 weeks worth of inventory. That'll help me. I have the juicer, I have the inventory that'll help me start the opening process. And the remaining balance is going to be held in cash. Okay, so let's take a look at how this looks, and we're going to ignore depreciation for the moment because we don't want to complicate things too much, but you'll see depreciation on the P&L. Okay, so let's calculate the inventory that we're going to need. So we forecast for the new store that we're going to produce 200 glasses of juice per day, and the cost
Maria, sorry to interrupt you. There's a question in the chat. It says, how much is 2 weeks of inventory?
Yep. So we're gonna figure that out right now.
Got it.
Yeah. So we need to figure that out, right? So we know that we're gonna have 200 glasses of juice per day. Each glass will have one whole orange that it takes to make a glass, and each orange costs $2. So we know 2 weeks is 14 days. We anticipate selling 200 glasses. And we need 1 orange per glass. And the cost of each orange is $2. So you can see here, our inventory that we need up front just to get our business started is $5,600. That's how much it's going to cost in oranges to produce orange juice for a 2-week time frame, based on what we're forecasting in our sales. So this is the other thing, and I know Jason talked about this with you with business operations and really getting very clear with your inventory. This is where a lot of business owners have to get super granular with where their money is on the inventory that you're purchasing, right? Because there could be a lot of waste here if I don't forecast correctly. And so I know that Jason took you through business operations and you had that whole discussion as to, who's the vendor that you're going to go with, what's the kind of oranges that you want. So you do have to get that granular with those sorts of costs, because then it helps you really determine and get clear, make sure that there is no waste, because I'm going to be really bummed here if I forecast 200 glasses a day and I buy, oranges that can go bad, and I'm not producing that level of, I'm not selling that level of juice per day. So that could be an area where you definitely got to get clear on.
Excuse me, Maria. So it looks like on the sheets that they have, it says 100 glasses a day, and the paper says 2 oranges. So they just want to know, does that matter?
No, let's just stick with the Excel spreadsheet. We'll kind of stay with this scenario, right?
Okay.
But thank you for pointing that out. I'll remember that it doesn't match.
Yeah, no worries.
So the other thing that you have to do now is we have to calculate the remaining cash balance. And before we do that, we have to calculate the cost of the machine, which was $1,200. And then I just figured out that my inventory purchase cost was going to be $5,600. So this shows me that the cash balance that I have from the $15,000 that I initially raised to open up the second store is $8,200. So it's 15,000 minus the machine, 1,200, minus the inventory that I purchased for the next 2 weeks. That's how much cash I have left over. So if you go back to the balance sheet, now you're going to see that this side is kind of filled in. So I have total of $8,200 in cash for the business here, which is coming from the 15,000 that I initially raised. I have the raw materials of 5,600 and the machinery of 1,200. And again, the balance sheet matches. I have enough money in my liabilities and equity that I can then use to purchase inventory, to purchase machinery, and still have cash on hand. So in a nutshell, for this example, that is how you would calculate and figure out your balance sheet. So I'm going to take a quick beat there and see if there's any questions about this process.
Feel free to come off mute, or if you want to put it in the chat.
Yeah.
So I do have a question.
Sure.
On page, my name is Kayla Kelly Birch. I am with Inspire. We, I am not prepared. I apologize. We help party planners with cakes and treats by delicious masterpieces to fit their themes. On the last page, on page 9 that we were just looking at, what would we fill in for cash relating to operations?
So let me see, because I do not have that pulled up. So your operations are here, right? So your revenue, or I'm sorry, your raw materials and your machinery. Those would be the
600.
right. So
Okay.
it's like, what does it take to actually produce the juice? You need inventory and you need the machine. Those two
Okay.
things.
So it's everything that you put into it.
Yes, yes.
Awesome.
And I love your business. I was just watching with my kids today, this Netflix show about, is it cake? Have you seen that one? It's like
Yes.
people who make cakes that look like real items. It was unbelievable. We were like,
I watched every episode.
okay, we just got into it today, so it's great timing that you're on the line. I loved it. It was
Oh,
like
beautiful.
a hamburger, looked just like a hamburger. I would never have known it was cake, but
Yes, I did a tree stump the other day.
oh, cool.
Yes,
That's awesome.
thank you.
Well, fascinating show. Anyways, we digress. So essentially that's the operating cost is the money, your inventory, machinery, at least for this scenario. But, if you want to think about your business, think about all those costs. And we're going to see that in more detail in the P&L. So the balance sheet is pretty straightforward at a high level. When we get into the P&L, it gets, you're figuring out more things like labor costs. Is there cost for rent, is for the space and whatnot. It's more granular.
Okay. Thank you.
You're welcome.
Cortina, I just see one letter in the chat, so I don't know if you had a question or if that was by mistake. You're on mute. Cortina, you there?
Hi, I'm trying to find a button. Hi, my name is Cortina. I am the owner of Kalani Beauty, and the people that I serve are individuals who are flying high. Flying high. I'm just say it right there. I don't want to mess it up yet. My question is that I'm trying to follow with what she's saying and with the sheets. So I didn't know if, because I saw that she said we were on page 9. Someone mentioned that we're all the way on page 9, but I didn't see that we were that far ahead.
On the participant guide.
Correct.
Yeah. So I'm gonna
Because I'm stopped at page 4, because then I didn't see that some of the things that you have on the spreadsheet for was not on, like the net machinery of 1,200 was not on there. So I added that in. So I just wanted to make sure I'm doing it correctly.
You're doing it correctly. I didn't mean to confuse you. We've updated this program and the Excel spreadsheet may not match your guide. I may have to look back and see that I sent you the right one. So for the purposes of this call, I may just ask that you just check out the spreadsheet with me, and then maybe I can find the right one and send it back to you.
Okay. All right.
Okay.
Thank you, kind
Sorry for the confusion.
because I'm trying to figure out the numbers.
I know. Yeah, no, it's confusing. And I apologize. We've edited it a bunch of times because it is not, we're trying to make it as simple as possible. And what we found is sometimes having the participant guide and this going at the same time can be a little confusing.
Okay.
So hopefully we didn't confuse you too much, but this balances out. And so let's take a look then at our cash flow statement. We're going to do this one next. So the first thing, remember we talked about the fact that with our cash flow statement, there are 3 key areas: your operating, investing, and financing activities. So we're going to see that here. And let's take a quick look at the scenario here. So we took really important steps to get the business up and running. We raised funds, $15,000. We bought inventory, we bought machinery. We know we have enough to get going and open up our store. And so now we're going to see how the cash is going to flow through our business. And so at this point, one thing to keep in mind is you'll see in the spreadsheet, we have a January 1st listing of numbers. And then we're going to take a look at, 3 months down the road, how the business is performing. But right now we're focused on January 1st. So our business is not yet open. They opened January 1st. And so there are no operations. There are no operating profits. There's no depreciation items to record because we're just getting started. Now in March, when we look at a 3-month window into our business, we are going to have those things, right? Because then we'll have some figures and see how much revenue we were able to generate. So you'll see here in terms of the cash flow statement, there's nothing, no depreciation to record yet because we just bought the machinery. However, we did purchase inventory for 2 weeks, and so that is considered working capital, right? So it's money that I need to make my business kind of run. So you'll see here, with regard to the investing activities, I will start with investing activities first, or I'm sorry, operating activities first. I utilized $5,600 to purchase inventory. And this is a negative on my cash flow statement because it is money going out. It's a purchase of inventory. With regard to the investing activities, I invested in the business by purchasing a juice machine. So again, this is another deduction, and it's $1,200. That's the cost of the machinery. And then you'll see the financing activities. We remember this from the balance sheet. These are the funds that came in. It was the source of funds coming in to help me start the business, right? So you'll see here in terms of the cash flow statement, you'll see we have the inventory that we purchased where we're going to put this in. There is the $1,200 from the machinery, and then I had a loan for $10,000, $2,000 from a friend, and $3,000. And I forgot to do this. These are minuses, remember. Oops. Ah. So you'll see here, the ending cash that I have is $8,200, which again, if I go back to the exercise, it should match the cash that I have. The $8,200 is the cash that we currently have after those expenditures. And you'll notice that that actually filled in here. So there is no opening cash balance because I'm not generating any revenues as of January 1st, but you'll see it reflected here in March as $8,200 that's left over. So as I generate income, then I can kind of start filling this in, right? And you'll see that in just a minute because we're going to start kind of filling this in, how much we're selling. But right now you have your working capital, which is the inventory that you purchased. The machinery is the investing activities, and here's the source of the funds coming in, the financing activities that came in. So you had a total, of $15,000 to start your business, and you actually have $8,200 in cash right now before any profits have come in for the first 2 weeks of the juice shop being in operation. So now let's start taking a closer look at a couple of other things. And specifically now we need to start working a bit and filling in the P&L statement, assuming that now we've been in business for, January 1st happened, we opened, we were able to kind of start producing, bringing in revenue. And so now we're going to look at a 3-month window to help us determine how, the profits and losses coming into the business based on the expenses that we've had. So we have a couple of assumptions happening here. First we start by calculating our revenue. So remember that the price times the volume of the product that we are selling. And then we deduct things like labor, rent, insurance, depreciation costs. And that's how we're going to then be able to determine and take a look at what does the profit kind of look like for our business 90 days into a new store being opened? So we have a few assumptions. We have been in operation for 90 days. The shop is open for 11 hours a day, and we have one person working for, at all times. So let's first calculate our revenue, okay? So we know that we sell an average of 200 cups of juice per day, and it's at $4 each. So the price is $4, and we sell 200. Over a 90-day period, our quarterly revenue works out to be about $72,000. Now, that's the revenue coming in, right? So now I need to start figuring out, what does it cost to produce the juice that we're producing? And so we're going to figure out the total for a 90-day period. What is the cost of raw materials? So in other words, oranges. So we have 1 orange per glass of juice. Each orange costs $2, because we must have gone with Juicy Gems if you were on the last call. And we sell 200 cups a day times 90 days. So we're bringing in $72,000 worth of revenue, but we're purchasing $36,000 worth of inventory just to make the juice, the raw material. Now, we also have to calculate and account for labor costs. So we have one team member working at the store. We're open for 11 hours. We pay $15 an hour. And so let's calculate what our labor costs kind of look like. So we have $15 an hour as our hourly wage. We have 1 employee per shift, and that's 11 hours a day. Over a 90-day period, our labor costs work out to be $14,850. We are in a retail space, and we have $2,500 is our rent, and there are 3 months in the quarter. So $7,500 is our cost for rent, and we have to carry insurance, so $1,500 in insurance costs. Now we start to look at depreciation, because remember, we've been in business for now 90 days, and we want to calculate the cost of that machinery over a 90-day period. What is the depreciation on a monthly basis for that machinery? Because remember, we want to, on our P&L statement, not always carry that $1,200 and count it as a one-time deal, but we want to spread that cost out over its useful life so that we get a better sense of depreciation. So if the juicer, if the cost of the juicer is $1,200, and we say that its useful life is 2 years, so 24 months, we know that the monthly depreciation for that juicer is $50 a month. So that's the figure that will then show up on our P&L statement. And you'll see, this is the benefit of having that depreciation piece, is that instead of eating up all of my profit with this machinery that I'm buying, I'm just counting for $50, because I know typically these machines last 2 years, and I'm gonna divvy up that cost, the overall cost, by how long I expect to have that machinery or equipment, I should say. So then you take your monthly depreciation, which is $50, and we know that there's 3 months in a quarter, so the quarterly depreciation is $150. And if we go back and take a look now at our P&L, or rather our income statement, you'll see here is where all of this kind of factors in, and you can see what is our operating income work out to be. So we're generating $72,000 worth of revenue. Remember, 200 glasses of juice per day at $4 a pop for 90 days, $72,000. to produce that juice, we need $36,000 in raw materials. We have to have an employee so that we have labor costs. We have to figure out our rent costs for a 90-day period, insurance and depreciation. And so our juice shop 90 days in is actually generating a profit of $12,000. So this is good, right? Because it's telling us in terms of our business, we are generating a profit. Where you get a little bit nervous is if you're in the negative here, because that means you're spending more than you're bringing in, right? And so this is why this tool is such an important tool from an accounting perspective. I think from a banking perspective, if you come to a bank and you want to ultimately get a loan from a bank, we are going to analyze the P&L, because this is the statement that tells us, is your business generating a profit or not? Based on how much revenue you have, all of the expenses that it takes to function, make your business function, are you able to generate a profit? And you see here for our juice shop, we're actually in a very good position because it is, right?
I just want to pause real quick and just see if everyone, are we still good? You can put a thumbs up, put something in the chat if you like. I just want to make sure that everybody is following along, or if you have any questions, please feel free to ask. We good? Everybody okay? I see two thumbs up, following, good. Anybody else? Okay. Anybody panicking? No. Slowly? Okay. I don't know if that's slowly panicking or slowly good, but okay. All right. I think we're good. You can go ahead, Maria.
Okay.
Okay.
No, and I, definitely, these are not easy concepts to understand, right? But it's almost like that budgeting, but for your business, right? So that you really get to understand, every time you get, you kind of in this realm, you really need to get clear on, is the money coming in and going out? What is that looking like? And are you generating a profit after you pay all your bills, after you think about what it takes to produce your, what you're producing for your business? Is money coming in? Are you in the positive? Because that is essentially your income. And that's why this is such an important tool, the P&L statement, because it really tells us a lot about the health of your business. This is a really important thing too, in the sense that you're able to look at a P&L statement year over year, and your accountant will put this together for you. They generate, basically, what's the revenue? What are all the expenses? What are you deducting from taxes? And then it'll give you like a operating income. And so this is a really important tool to help you year over year to see, how is your business growing? Are you growing your profits? Because then you can start making decisions as a business owner to look at this and say, going with the juice shop example, for example, maybe maybe I'm spending too much on oranges. If I'm not generating a big enough profit, then it gives me that line of sight into saying, gosh, I'm not generating as big a profit as I need to. So either I can make adjustments to the cost of the juice. So right now I'm selling it for $4 a glass. How would that change if I bumped it up to $5 a glass or $6 a glass? So you can think about, can I increase the price? Can I sell more juice? Can I sell 250 cups of glass a day, of juice a day? So that's another way to increase your revenue. Or I can look at what are some of the expenses that are associated with my business, and do I have opportunity to cut some of those expenses back, right? So maybe I have, right now we're spending $2 an orange to make that juice. Can I get it for cheaper? Can I find a supplier that's going to sell it for $1 an orange? So these are the things, like, if you have this insight into these numbers, you can really begin to develop a really strong strategy for your business and how you can increase your revenue and cut down expenses, because then your operating income is going to be higher. So hopefully make
Sorry, I didn't mean to
sense?
cut you off, Maria. So we had a couple people, I think they said a little bit to the panicking question, or if some things were being understood. It is a lot of information to take in, ladies. Maria, is it possible, like, can we just play with the numbers like another example? Is that possible at all? Like changing?
Yeah,
it?
you wanna see what happens if we increase the revenue and just go with like a different, let me see.
Yeah.
Yeah, you
Ladies,
can play
would
around.
would another example, just play with the numbers, would that help a little bit? Just tell me in the chat, thumbs up, wave, anything.
Yeah,
All right, I saw a wave. All right, so we're gonna go with just like another example.
yeah, and I see some questions in the chat. Maybe we can
Yes.
kind of answer some of what's here too.
Mhm.
So Layla asked a really good question. What about the cost of cups and lids, utility costs? We're keeping it super basic for this scenario because it can be overwhelming, but you're absolutely right. Those would be part of your operating costs. So when you look at, when you look at this exercise, you would be adding those here. That would be coming off your $12,000 total. So, depending on the cups that you utilize, or if you sell reusable ones, that's another area. Utility costs, another area of expense for the business. We try to keep it as simple as possible for the scenario, but those are really good. Let's see. Yeah. Yeah, so sometimes it's just a matter of playing around with the numbers. And again, feel free when you get this, you can plug, I'll send this out to you so you can plug in different numbers and see if you pull different levers, how does that impact your numbers here. So let's go with price, right? So let's say 90 days in, we're not super happy with $12,000 being our operating income, and we're trying to figure out, is there another way that we can bump up our revenue? So let's say maybe we decide we sell the juice for $6, right? So what does that do to our revenue? Goes up. So if we go back here, just bumping it up $2, just look at what your operating income has gone from, because your expenses have stayed the same, your volume has stayed the same, right? But your revenue coming in just by bumping up the price by $2 to $108,000. So then if you deduct all the expenses and you keep your supplier, you keep your person that you have working for you, you keep the rent the same, your revenue, your operating income can increase significantly. The other thing you have to think about when anytime you're raising prices is you have to think about what's the impact to your customer. Is that going to be sustainable for you to continue to sell 200 cups a day at that price? So that might impact your volume, and that's something you need to consider, right? Because you may have more people who are willing to spend $4 for a glass of orange juice, and maybe that number gets a little slimmer if you're doing if you're not doing as much volume. So if we were to keep the price the same at $4, but we set like promotions, or we get really good about our marketing and our social media, we run promos, maybe we can increase our volume. So we can aim to increase our volume, let's say by just increasing it by 50 cups more per day. What does that do to our revenue? Not as much. It's not gone up as much, but if we go back here, it's still kind of doubled your operating income just by setting some loftier goals with producing more volume. And so the benefit of using the P&L is that you're able to kind of make these adjustments and say in real time, this is 90 days of my business. This is how I've been doing. This is the revenue that I'm bringing in. Is that the right price? Is that the right volume for the expenses that are associated with producing that product? And so that's generally the benefit of having this income statement, is that you're able to, like in real time, make those strong adjustments to see, is there another way to continue to grow your business? Does that make sense? Hopefully. Okay. And then the other things you can kind of play around with, I mean, we can kind of go back to this and let's say we increase the volume, we keep the price the same, we increase the volume by 50, but we also can take a look at different suppliers. So can we find a supplier at 250 cups per day that'll sell us oranges cheaper? So we need one orange, can I get it for $1? Right, so look at our cost, just goes, it's slashed in half, right? So what does that do then to my costs? So you'll see, again, it just bumps it up just that much more. Because again, I'm increasing my volume, I'm decreasing the cost to produce that item. And so again, you're increasing your profits, but you wouldn't have line of sight into doing that if you're not doing this exercise. So the benefit of having this tool is that it shows you where can you make adjustments to develop a really strong strategy for your business in terms of the revenue that you're bringing in and the expenses. What is it taking you to make that money? And I can share with you, like every business does that. Like in banking, we kind of look at like, what is the cost of acquiring a new customer? What is the cost of maintaining this type of account? These are all the things and expenses. What's it cost to just keep the lights on and keep people employed? And what's the revenue coming in versus the expenses going out? And then we can kind of just figure out like what's our profitability and make adjustments where we need to. So hopefully that makes sense. But that's one of the things you can do with this income statement is just play around with the numbers and just give yourself a better idea of how you're kind of performing.
Thank you, Maria, for going through that.
Sure, no problem. Let me put this back because it will mess up my numbers. And I think we had okay, I think that was it. All right. But that's a huge difference, just moving around a couple of different numbers and thinking of different strategies. Okay. All right. So now we're gonna figure out the cash flow statement. And so for this, hopefully I don't confuse you too much. But to fill in this cash flow statement, the next thing that we need to consider is, remember we completed the cash flow statement as of January 1. We hadn't been open yet, but now we've been selling juice for the past 90 days and we want to see where does this align. So we'll start with the beginning cash. The beginning cash is the cash that we had recorded on the balance sheet at the start of the period, which I think was $8,200. And then now that we've been in business for a bit, we're going to be able to take some figures from our P&L and see how that changes some of our working capital. So you'll see our beginning cash is $8,200. That's what we had coming in. We have our operating income is depreciation and the cash from operating activities. See.
Hey, Maria, sorry to interrupt, but right before we kind of move forward, that question came through. It says, what costs are considered when determining the cost to increase customers? Also the same thing for marketing and advertising.
So I'm assuming this is for like the banking example, maybe?
I believe so. Lilia?
Yeah.
Okay. Lilia, if you want to come off mute, if you had something to add to that.
Yes, I just wanted to know when you're considering the cost to increase your customer base, what costs are you assessing to determine
Yeah,
what
so it
the real
depends.
costs are to increasing customers? Is it the marketing and advertising dollars? What is it?
it's a part of it, right? So you have to think about to attract new customers, you know, especially in the banking field, you need to have strong advertising, you need to have strong product. And many times it comes down to the rate that you are offering folks, you know, from a lending perspective or a savings perspective. So, and then there's also the cost of, you know, the time of the employee who now has to develop that new partnership. So there's a new, you know, you're starting from scratch. So you know, the building the relationship that takes time. And so we have to kind of figure out the investment of the colleagues and the bankers to get to know the customer and be able to offer programs and products to them. So there's a bunch of different things that kind of we look at, but marketing and advertising are the huge ones. You know, we do direct mail, we do commercials and things like that. We're very heavy with our social media presence. And so there's a lot of little things that we think about when it comes to acquiring new customers. There's cost involved with that. Whereas if you build a loyal customer base, sometimes they send you people, you know, referrals. There's, you know, they come back for repeat business. And so the cost of acquiring a new customer can sometimes be greater than developing an existing relationship, right? Because you're not going to have that trade-off, if that makes sense.
Yes, but for a business such as this juice business, so the banking is pretty much a service, but that juicing business is a product.
Yeah.
So when it's a product, what are the cost of generating a new customer? What cost should I be considering besides the marketing and advertising? Is there other costs I should be considering?
So I think when it comes to acquiring a new customer for the juice shop, you know, advertising is the biggest one that I can think of. I think, you know, how are you promoting your business is probably one of the biggest things that I can think of to acquire a new customer. What are you doing in the community to attract people to your business or to let the community know that you're there? Remember, this is a new location. And so there may be some costs with, you know, doing events and whatnot that are involved just to let people know that you're there. Like many businesses have grand openings. Those things cost money, right? To have those events to attract new customers. And so it is sort of like marketing, but it's a little bit of, you know, if you're doing those grand opening things, that'll cost some money to attract a new customer.
Thank you.
You're welcome. I just saw another question come through before I got out.
So besides advertising and marketing.
Yeah, you have to make sure you have enough product, right? So that's another really important point, right? So I'm only figuring I'm going to sell 200 glasses a day, but if I'm doing all of these activities, I may need to figure for more. And so that's another area that you're going to think about. You may need more raw materials, there's more expenses involved, which is important for us to kind of keep in mind as well. All right, let me see here.
I have a quick question, if it's okay.
Yeah.
I just wanted to ask, do you have any suggestions on how to better market and advertise the business when you are advertising a service rather than a product?
So what do you do today to advertise the service that you provide?
Well, honestly, a lot of my customers come from referrals from my past customers. It really does. I can honestly say I don't do much advertising and marketing. I really don't, besides like Facebook posts from time to time.
Yeah.
It really comes from my past clients and them telling their friends and family about the service.
Yeah. So I can share with you, my husband is a small business owner. He owns a massage therapy practice. So very much like you, provides a service. And social media marketing has been a big driver of business for him especially after COVID, right? Because I think people were like social distancing, and then to have massage therapists, it's a tricky boundary, right?
Right.
So for him, social media marketing was like a big thing, and he did promos. So he would do every month he's been doing like, like for instance, this August is like teachers are kind of wrapping up vacations and getting ready to go back to work. And so he's running a promotion for teachers to get a half an hour free massage. And then of course, once they are there and they book the appointment, then they try to upsell to like an hour, because a half an hour is not enough. So, so they do those sorts of promos, and they're targeted. So he's done teachers, he's done healthcare workers, he's done, military families. So just different target groups, and every month there's some sort of promotion. The other thing that he does is, you mentioned word of mouth and referrals being really big. So he is very good about ensuring that his clients, like right after they get the service and they're in that really blissful state because they're happy, he asks for them to do a review for him. So Yelp, Google, reviews, and that's like really helped his business, because when people then search for massage therapy services, it bumps up your business when you have strong reviews. And so that's been very helpful for him as well to do things like that. So I would just encourage you to maybe think about, getting really strong with your social media. And then the other thing he started to do too, is a lot of people now sometimes can't make or think they don't have the time for self-care. So he, on his Instagram and his Facebook pages, he will post like every once a week, I think, like, or twice a week. He'll do like, this is a stretch you can do for your neck when you're on your desk, or if you're looking at your phone too much, these are the things that you can do to kind of stretch out your shoulders and whatnot. And so that sometimes are good things for people to see on their feed, because it reminds them of like, oh my gosh, my neck is really hurting right now and I need a massage. And so they'll book, and he'll always have, he does online booking. So they'll have the link right to book, or if there's cancellations on his calendar, he promotes that on social media. Like, we have an opening, these are our openings for the week. And so, here's where you book. Because a lot of the times I feel like with services in particular, people just need to be reminded of, here's this thing I haven't done for myself in a while.
Okay, thank you so much. That was very helpful.
Oh, good. I'm happy. He does a lot with his business, so I'm always happy to share his secrets. I listened to a lot of his discussions, and so if I can help, that's good. All right, so let's take a look then at our calculating our cash flow from March 31st. So we have the beginning cash that we started off with was $8,200, and then we have our operating income is going to be our depreciation and calculating the cash from our operating activity. So if you remember that from our exercise here, our operating cash is $5,600 plus depreciation, which was $150. Let's see. So operating income was 5,600. And depreciation was 150. And I always forget to do the minus. And then there's no change in the investing activities and no change in the financing activities. So the ending cash is $2,450. And so if we go back here, you'll see that we started off with $8,200 and we kept, you know, the 5,600 and 150. And then our ending cash here is 2,450. Now, if we look at, we're gonna fill the asset side of the balance sheet that we started to work with. So we are going to take a look at this. It says the closing cash balance of 20,350. Let's see. We're going to enter in right here. And then we have the inventory balance of $5,600 that we're going to keep. And we're going to figure out the quarterly depreciation for the machinery. So remember that was $1,200. It's useful for 24 months. It's $50 monthly depreciation times 3 months is $150. And so now you'll see we're going to calculate the net machinery balance. So which is the purchase price for the juicer, the cumulative depreciation, which is $150. And so the net machine balance is $1,050. And so here you'll see the balance sheet here. We had $20,350 in cash after a 3-month period, minus the raw materials, the machinery, and the accumulated depreciation. You'll see right now our total assets are $27,000. And then I believe the last step is completing the liability and equity side of the balance sheet that we had to construct. And so remember here we had our IOU from our friend of $2,000. The bank loan is still $10,000, $3,000 in our own personal contributions. And the retained earnings, let me just see, is the operating income. Let's see. Is that 27,000. No, hold on. That's not it.
I think the instructions said 12,000.
Oh. Okay, hang on, let me go back. Of course, now I'm frozen. Yes, you're right, $12,000.
Thanks, Kim.
Now I'm getting confused on my numbers. So you're right. So now that's how that matches. If we look back at the balance sheet, both sides are the same. So in January 1, our total assets and liabilities matched at 15,000. And now that we've been in business for 3 months, we see that the assets are 27,000, and so is the liabilities that we have in the business. So that's what you want to see, right? When the balance sheet matches. And so in terms of these items, you have some notes that'll help you with this exercise. I can send a step-by-step instruction so you can kind of plug in the numbers and see how that works. But in essence, that is how the cash flow statement, income P&L statement, and your balance sheet kind of work if you're looking at the juice shop example. So any questions? I'm going to head back to the PowerPoint here, but happy to take any questions that may be out there.
Is this done on a monthly basis, every 3 months? Are we hiring somebody else to do this? I'm sorry, you probably said this already, but I came in the middle of the class. So I'm just kind of having a fit over here because I'm terrible with numbers.
No.
Like stressing me out to the max, but I'm interested in learning either how to do it or finding somebody that I can pay to do it for me.
Yeah, so there are different platforms and systems you can utilize. I would say this is something that you can, I mean, if you sit down with your figures, especially for, you know, like things like your income statement, your cash flow, you can kind of use that spreadsheet and you can format it for your business, but you can kind of just go through the, you know, taking a look at how much revenue are you bringing in, what are the expenses associated with getting that revenue for your business. You can hire someone to do everything for you. Your accountant can provide these figures for you, but it is also something that you can kind of do. And there are services that are available as well. So don't be intimidated by the numbers because it can be very intimidating. But I think that if you take a moment to just sit with your figures and get all of your, you know, what is the revenue that your business is generating? What are all of the expenses that it takes to produce that product or provide that service? This is something that you can conceptually really figure out. And so it's not very complicated. It seems that way because there's a lot of like different terminology and whatnot, but essentially you're just doing that. You're kind of looking at what's the cost of doing business. What's the revenue that I'm generating minus the expenses that I have. That's the income statement. That's probably the biggest one. The cash flow, what does it cost to operate my business? Where am I getting, you know, what am I investing in terms of equipment for my business? Where is the funding coming from my business? And how does cash move through my business? So it's not super complicated. And then the last one, we, you know, talked a little bit about the income statement. Again, takes many of the components from the other two to kind of give you a really good sense of how your business kind of generates revenue, that, you know, and create that profit. So hopefully that helps you out, but an accountant can always help with this too. If you want to hire someone, I would start real basic.
So an accountant, you can get an accountant to help you. I mean, I honestly just need somebody to sit down initially, like, and just go step by step with me and show me how to do it. And then I can take it from there.
Yeah.
So an accountant.
Yeah, and honestly, I feel like if you came in the middle of the session, I know it's being recorded, right? So maybe
Yeah.
go back to the recording and see how we're utilizing these spreadsheets. And you'll, I did mention this, but we are going to be sending out that spreadsheet. So you actually have the Excel spreadsheet that you can kind of make it for your own business and plug in your numbers and just think about, you know, what's your revenue, what are your expenses coming in and out, and kind of it, and just need to sit with it for a minute to figure it out. It's something I think you could absolutely do. And bankers can help you with this too. If you get, you know, like a really good business banker who's used to looking at these statements all the time, you can come to the bank and we can help you figure that out. Sometimes they do that for you too.
Oh, okay. All right. Thank you.
You're welcome.
Just wanted to mention, Lakita, we did send out a link last class regarding financial mentorship as well. So if you have not signed up as of yet, please feel free to email me. I'll put that in the chat. And then we can kind of get you set up with some time as well.
Oh, yes. Thank you. I definitely need that information.
You're welcome. Maria, we do have a couple questions in the chat. So it says, how do you account for payments on the loans? Well, that's the first one. We have more after that.
So once you have the payments on the loan, you'll see that that balance on the balance sheet for the loan will start to go down, right? So as you make those payments, as you start to pay your friend back, or you pay the $10,000 loan to the bank or the community organization where you got it, that should decrease, right? And then in many cases, the interest can be tax deductible. Again, that's something you can talk to your accountant on, but that's where you see that impact. As you pay that down, you can modify those numbers.
Thank you.
Mhm.
And then someone asked if they need a computer for this. I personally would say
Yeah,
computer or laptop, probably not ideal.
iPad maybe. I think you probably do need, like, I think it'd be a little bit tough to do just because the Excel spreadsheets. I know that you can get those apps for Excel on your phone, but it might be a little complex.
Yeah, I personally can't do anything on my phone. There's not enough space. So, you know, I know some people are much better at that, but probably recommend to have a laptop or computer. All right, so we say, let me see. Just checking if this is a question. It says when you take out the loan, they'll set you up with a payment plan, whether it's for months or years to pay back loan. From there, just take a portion away from your gross income to assure you can afford to pay the loan back and on time. All right.
That's a good suggestion. Auto debit is always a really good suggestion too. If you set those automatic payments, you'll never miss a payment.
Definitely. Kayla, okay, so you needed page 10, correct? Okay, Maria, is it possible to go back to page 10?
Of the participant guide you're talking?
The part, yes.
I can resend it to you.
All right, so we'll get that out to you, Kayla. You're welcome. Let's see. We don't understand numbers, professional. Lelia says, if we don't understand the numbers, professionals can take advantage of us. We see it in
Yeah.
sports and entertainment all the time.
Yeah, I mean, I think it's interesting, this, I'm having like my kitchen remodeled, and the guy who's redoing my kitchen, he's an excellent contractor, but the business side of things, sometimes not great. So he's not here today, so I can kind of talk up freely, but you do have to understand what it takes to run your business and the cost of doing business. You have to, it's so critical, not only for your own success, but it is a big impact to your customers too, when there isn't that line of sight, especially when you're providing a service. So just this week, he was like, I didn't factor in materials with the estimate I gave you. And it was like, well, that is kind of a big deal. It's like a lot of cabinets that you're building here, you know, like it's not a minor little like, oh, oops, I forgot. So, you know, from a customer perspective too, there's an impact if you don't understand the figures. And so a lot of people who are in business for themselves really are good at like their business and like what they do, you know, whatever that is. But you have to build this, it's like a muscle. You have to kind of work at it all the time and to really build that aspect of business acumen, because if you don't understand how your business makes money, you're going to have a hard time making more. So it's a must.
I like that.
Awesome. All right. We have a couple other comments in the chat, but I don't see any questions. So Maria, I don't know if you had more that you needed to go through.
No, I think that, you know, as the post session, I would just recommend, you know, utilizing that spreadsheet that you had, I'll send that out in the completed version. So I'll send 2 versions out. So you have an opportunity to kind of plug in some of those numbers, and you can use some of these formulas if you want to change it for your own business. And I think that the programs that Pathstone offers with mentorship and just being able to sit down with someone, you know, those are the things that are going to help take you to the next level.
Awesome.
And so that was it for me. Thank you very much. I appreciated the interactive session and all the questions, and always such a pleasure to work with Pathstone.
Yeah, no, thank you so much, Maria, for an amazing presentation. That's a lot of information to take in. So nobody panic. It's gonna take some time to understand. I think the more you use the resources that Maria is gonna be providing, the more you play with those numbers, the more you really are going to understand your numbers for your business. And you'll know, right? Are you just breaking even, or are you making a profit, or are there some strategies that you need to implement so that you're not losing money, right? Because we're not in this to lose money. Okay, I think we're good. I haven't seen any questions or anything come through the chat. Want to be respectful of everyone's time. You get back an additional 29 minutes of your day. So don't forget, next week is when we're going to start talking about the pitch competition. Make sure you are here if you plan on participating. If you are not here, you are not participating, but you're more than welcome to see the show. So we will see you all next week, and we'll definitely get the Excel sheets out to you. Give us about 24 to 48 hours, worst case scenario. Thank you again, ladies, for your time, and see you next week. Bye.
Bye. Thank you.